All right, everyone, welcome back to the channel and thank you for tuning in to another video. This recording is coming late in the day, but I wanted to go over just a few trades that I took on the day, okay? And I hope everyone ended up faring well today with FOMC this afternoon, which took place around, at 2 o'clock p.m. So, this morning, I definitely want to go over this area right here. Receive some questions, or not say concerns, but just questions, in reference to, when to take trades at an area of demand or supply, especially when you have an imbalance back or resting at inside the zone. Okay, now if the zone has already been tested, what I talk about as part of one of the steps of my strategy in which I trade is if it's already tested, it makes it a low probability zone. That doesn't mean the market won't come back to it and reject and then, push up in this case here. But most times, if it's a low probability zone, I'll pass up on it because if it's already tested, then they're probably going to blow through it, okay, or push through it. But in this case here, all right, and I talked about this in I'm not sure, just a couple of days ago, maybe a week ago, but I've talked about it multiple times in several videos about having an imbalance resting on the inside of the zone, okay? Now, when you have a gap or void at a supply or demand zone, in this case here we're talking about demand, plus you have the actual an imbalance resting inside the zone, that really makes it high probability, okay? But just having that gap or void at the zone alone, because you'll see instances where they're, say for instance, this candle right here was just a big green bullish candle to the upside here. And so basically you almost have like two candles inside this zone here, okay? One that broke up right here, a bullish candle. Then a second one that broke above the last bearish down candle, which is creating our demand zone, right? And you have an imbalance resting on the inside of the zone, okay? So sometimes what you'll get is this candle will be equal to this red candle right here, this bullish candle, to where it'll push up and be neck to neck at the top end of that red candle, not leaving an imbalance in the zone. But you may get the break above with this candle here, okay, and then there will be, the next candle, the third candle closes above, that it may not come back and tap or test the top end of that red candle. So then we have a gap or void resting back at the zone, but there's no imbalance, right? So the best probability setups or high probability setups is where you have a gap or void for one back at the zone. When you got a gap or void back at the zone with an imbalance, well, that puts a little sugar on top of a little icing on top of the cake. So in this case here, now, I know some individuals or traders are probably a little confused because we do have a tap zone, because what took place here, the market pushed up, it pulled back. We got a bit of aggressive buying coming out the zone, which broke above this last bearish candle to the downside. But you see this third candle that popped above there? The wick of it pulled back and tested the top end of that red candle there. So it didn't leave an imbalance, not imbalance, or a gap or void back at the zone, but we have an imbalance resting within the zone. So lots of times what will happen is they'll come back to that area there, feel that imbalance in, and may reject it and push back up into, push back up in the same direction of the market. Now, first and foremost, what we need to pay close attention to is what was the overall direction of the market prior to even looking at this trade. All right. Yesterday's session, we even had a lower high in a sense because it broke higher, right? But it did test lower areas, and we did push through some areas of structure right here. This was a deep retracement. So when it started breaking down right here, okay, there could have been an opportunity to go short, which there was an opportunity right here. But then it broke back above, okay? So this was a deep retracement, high, deep retracement. Excuse me, breaking above this area here at 547. So we got to break higher. So we're still bullish, right? Then to the overnight session, the market kept making higher highs and higher lows. At the open of today's session, we made a high here. It pulls back, okay? And it taps into this demand zone right here, okay? All right, which was a prior tested a zone already, but we had that imbalance resting right there. So what took place here is that it pushed into the zone, right? Okay? It actually broke, okay? It's a minor break of structure right here below this area here at 600. But keep in mind, too, what also we have here is that there was an imbalance that was tested here. And another reason why the market really held up at this area, because there's a round number. Hope a lot of you guys pay close attention to that. 16,600. Round numbers and half numbers, the markets can definitely go up, can hold as areas of support and resistance. I mean, the market could actually reject those areas. Just as like when we trade in supply and demand, those areas there, supply and demand, we're looking for some type of rejection. If the market hits a round number, you have to think about there's a possibility that it loves to actually react at those areas, okay, or those levels just as well. So we have that imbalance there. The market pulls down into it, but it's also wanting to test that round number too, 16,600. It tested, it rejected. Where we're going to take the trade back up to, always allow the higher time frame to kind of give you or allow you to see an area where you can take the trade back up to. When the market retraces here, we have these imbalances back to the upside, okay? It's going to want to fill those areas. And it goes right back up there. So my aim was right here. I took this trade today back up here at 641. That would have been where I already got the trade in, okay? All right? And the reason, what took place here too also, I don't know without looking out to the left-hand side of the chart, it was an area of supply that it bounced off of, or an area of resistance it bounced off of. But one thing for sure we have here is 16,650, a half number, okay? So that's another reason why it stalled out, rejected right here. It went back up there if you took this trade long, back up there to fill that gap, to fill that imbalance right there, and rejects it and pushes lower. What does it do when it pushes lower? It actually breaks, it breaks lower and breaks structure below, okay? So was this an area of demand rate? Supply right here? Yes. You could have looked for an area of rejection when the market pulled back there to take your trade going short, back down towards the lows, and it ran the lows. I didn't take the sell, the short, but I took the demand side of things back up to the upside, okay? So understand that when you have that imbalance resting back at a tested area or tested zone, there's a possibility it can react and you can look for rejection, but you got to move down to that lower time frame chart to look for that rejection, that demand set up on a lower time frame just as well, okay? Again, higher time frame is king, okay? When I'm speaking of higher time frame, I'm not talking about time-based charts. I'm just saying using higher time frame as a reference when it comes to the range charts here. I can say higher base charts or whatever the case is, but just be mindful when I say higher time frame. I mean charts on the range chart type basis, that meaning that they're on a higher basis, okay? So what took place then? The market started running back to the upside, okay? Now, that was my only trade I took in the morning time, okay? The market kept moving higher because I had something else I needed to take care of, and it was a decent trade that I took back up to 41, 42 area, okay? So this afternoon, I knew we had FOMC, all right? So I kind of stayed out of the market, took care of some other business, and then I saw this happening right here, okay? The market got up to this round number here again. Now, this is, keep in mind, a round number at 16,800. It rejected that area. I didn't really even have to take a look at the left-hand side of the chart, and this may be all-time highs. I haven't really looked and paid close attention, but it rejected that area and it pushed lower. Now, at that point, I was paying attention to, on the higher time frame, price action to see, okay, where could it possibly go down to, and break if it starts breaking lower. And this is a demand area down here at the bottom, okay? So when I started noticing that it was breaking lower and taking out structure to the left-hand side of the chart, I said this thing, just paying close attention to price action, is probably going to test this demand area down here, and that it did. And I posted my entry on that trade there over in the Discord community. So, which I can show you right now. Let me pull it up. What was that short I took? It was a nice short. It was like 43 points. All right. Let me show it to you guys. Here it is right here. This is the trade I took right here, going short. 2 contracts, 43. It got down like 43, 45. It went past that area there. So 43 points, something like that would have closed out to be. So anyways, beautiful trade right there. One of the better trades, and you're getting trades like this if you really pay close attention. Use the higher time frame, as a reference guide, or GPS, location finder, or whatever the case is, however you want to say it. Just kind of using that as knowing where to take a trade to. I saw it rejected above. Pay close attention to price action on a higher time frame, and saw where it could possibly end up going to if it started breaking structure down on the on the higher time frame. But I took my trade on the lower time frame, okay? So I saw what was taking place. I saw the market. It started moving pretty quick, breaking structure to the downside. So I looked for a breaker structure continuation taking it to the downside. When it pulled back here, there was a demand zone, excuse me, a supply zone right here on the lower time frame. I got in when it rejected that zone. You can see right here, this was the area I'm talking about right here. Pulls back to it. This is actually an M structure right here for those that may trade. You know, I talk about M structures, W structures. A lot of people who are traders do. Comes back up here. That's a supply zone right there, though. It rejected, close of the candle. You know, the break of the close of the candle below, go short. At that point, I was aiming for that area of supply I just showed you on the higher time frame chart, okay? Which was, we'll put this back over here on my other monitor right quick, which was right here, down here, right here, demand zone right here. Then, solid area of demand. Today, we're still bullish in the market, okay? We're still bullish. We're breaking structure to the downside on the lower, you know, in today's session, right? But these are just minor breaks of structure back down to the downside. But they are breaks of structures. But, you know, we haven't really closed below or broken and taken out the lows of today to where then we start to have to look at, you know, the prior day's structure of the market, okay? But we're still within structure, you know, still within the movement to the upside. This could end up being just a deep retracement to break structure back to the upside. But still, the key to it is trading supply and demand and following the market structure. Yes, when it pushed lower here, it started breaking structure over here. You know, can you look for shorts on pullbacks? Yes, you can definitely do so. But also be mindful that in the session for today, we are bullish because it hasn't taken out session lows and broken through areas of structure after taking a low out to the downside, okay? Meaning taking out the session lows and then start breaking through areas of structure within the prior day session. So as long as we're making structure to the upside here, I could consider this a deep retracement back to demand and still be bullish. I think the market still has a sentiment or is to where it's still bullish. But if I start to see that it starts to make lower highs, okay, gets up somewhere and starts rejecting, then my mind might start shifting and start looking for opportunities to go short. But this right here was a demand zone rejection. I called it. I posted it over on the Discord community. I said, pay close attention to. We're at a 60 range demand zone off the higher time frame, which is this right here. Rejected it. I said it's probably going to go up to 31. It hit 31. Okay, you know, you have to know why. Okay, it's going to go up there and feel those imbalances back up to this area here where it started moving lower. Okay, and then coming down and testing this area because it's looking at searching. Okay, where the imbalances at? One here. Okay, where's the next one at? One here. What's the next one at? One here. Okay, and then it's looking to see, you know, is there any more above? It can push right through this now back up to the upside, possibly after pulling back. But, you know, just have to pay close attention to what's going on, all right? But anyways, I like to see clean areas to where I can take my trade back to. So you get into a trade right here where I mentioned it at this demand zone. Give me a second, guys. My chart is sticking or freezing up. Okay, here it goes. Right here at this demand zone, and take it back up to this area right here. Clean, straight, push to the downside. Aggressive selling to the downside after it with you know, coming out of where there was aggressive buying, tapped into the zone here. I'm taking it back up to this area here. All right, to what did I say, 31. So that was another good setup to take a trade going long. So I took a long here, okay, shorted in this area right here, back down to the demand zone. Took a long in this area here, back up to this area of. Actually, I didn't take it all the way back up there. I think I got out right here at 20. Was it 23? I think it was 23. Let me see. I posted it over on the Discord. 23. So I picked it like 11 and a half points right there, something like that. All right. So I just want to show you guys those trades. That trade is right here. I'll show it to you. It's on the Discord. Okay. Right here. All right. From here, I think I got in below, what was it at? Around 8 or 9 maybe. And then took it on up to 23, okay? Somewhere 22 and a half, 23, somewhere in there, okay? Anyways, it was a solid trade. It was like 11 and a half points. But I just want to break down those trades for you guys today and just show you, you know, what I took. And hopefully some of you guys took the same trades, you know, as I did. So just pay attention to market structure. I keep kind of trying to stress that because it's important. Once you are able to understand market structure, then that means you're able to read the market, okay? Again, I'll say that. Once you're able to understand market structure, then you will be able to read the market, all right? But for all those that are newcomers to the channel, please do yourself a favor and understand and learn market structure. I'm going to tell you that now, because when you got that nailed down, you're going to have 90% of the game, okay, when it comes to this business of trading, under your belt. And you're setting yourself up for profitability, okay, for greatness, all right, for consistency, you know, all those great things. But that's all I have today in this video here. Hopefully that shed some light and helps some of you individuals out there. If you're a first-time viewer, please take the time to go ahead and sub by clicking on the subscribe button down below. Please make sure to turn on all your post notifications. And last but not least, please drop a like on the video. And if you're interested in joining the Discord, find the link down in the description portion of the video. I appreciate everyone that tunes in on the daily. Thank you so much. And I appreciate everyone's feedback and your positivity, your positive comments. Appreciate everyone that's joined the Discord community as well. And I wish everyone a safe, well, I hope everyone had a safe trading day today. And I'll see you guys in the next video. I'm going to go ahead and wrap this one up. Take care.